Right, good afternoon. It's exactly 16:06 Central African Time. It's Monday, the 30th of March 2026. Good afternoon and welcome. My name is Innocent Semosa, standing in for Tami Ngubeni. This is Africa in Business on Channel Africa. Well, coming up on this hour, the 14th World Trade Organization Ministerial Conference, or MC14, ends in deadlock after Brazil blocked a US-led bid to extend the moratorium on customs duties for electronic transmission. And the Automobile Association of South Africa says it might take action against the government should the upcoming fuel price hike be driven more by taxes than global oil cost. Well, stay connected to Africa and the world with Channel Africa, the international voice of the Southern African Broadcasting Corporation. Watch or listen anytime, anywhere at channelafrica.co.za, on the Channel Africa mobile app and on SABC Plus, or via the DSTV and OpenView audio bouquet. You can also catch us on social media at Channel Africa, on Facebook at Channel Africa 1, and all platforms. And of course, Channel Africa, this is the African perspective, first with the African story globally.
Get Channel Africa on DSTV audio bouquet. Channel 802. Get Channel Africa on DSTV audio bouquet. Channel 802.
All right. Concerns continue to linger across various sectors of the economy regarding the impact of the prolonged Iran war on South Africa as global oil prices surge above the $100 per barrel mark. The domestic fallout is becoming more pronounced for both businesses and consumers. Now, the Black Business Council, BBC, is lobbying the government for a lifeline, especially calling for credit guarantees to help businesses stay afloat. Meanwhile, the construction sector is sounding the alarm. High fuel and material transport costs threaten to blow budget and stall project timelines. SABC News economics reporter Katlego Legodi reports.
The war in Iran is likely to worsen the cost of living crisis in South Africa, with the Black Business Council warning of looming job cuts. BBC CEO Hanke Matabane has urged government to come up with measures to protect small businesses.
They should not necessarily be reminded that they have to do something. There's a crisis. Everyone is aware that there's a crisis. There's a war that is happening in the Middle East. And when you hear what President Trump is saying, you don't necessarily see the end of it. So government has to be proactive and look at alternatives. For small businesses, maybe look at the guarantee scheme of some sort, so that at least the banks can be able to extend the credit to small companies.
Those in the construction industry are equally concerned. President of the Construction Alliance South Africa, CASA, Musa Shangase, says the anticipated fuel price increases in April will put significant pressure on the construction sector.
If the project is going to last 18 months, then you factor, the price increase of material, based on the inflation. But we did not factor the war in the Middle East, and that's going to have a ripple effect on most of the contracts, and business to business, business to client, and your suppliers, logistics, et cetera. And of course, it's going to cause some project delays, because most of our South African construction companies do not, they struggle on working capital. So, they're working from hand to mouth. If the next thing, the cost of running a project is going to go up by 50%, then that project won't be finished on time.
The National Agricultural Marketing Council's economist Tabile Nkunjana is warning that the rising fuel prices will significantly impact the food and agricultural sector by increase in production costs, rising logistical expenses, and a reduction in profit margins, which will ultimately lead to higher food prices.
This region is very crucial in terms of transporting the fuels and fertilizer, and with South Africa being a net importer of both fertilizer and of course the fuel, the situation there remains quite a crucial one for the country, because we are entirely dependent for the fertilizer. That remains quite a crucial thing, because about I think around 25% of our fertilizer in terms of the quantities from 2025, it came specifically from the Middle East, and that has implications not immediately to the later part of the year in terms of the food prices and inflation.
The ongoing war in the Middle East has pushed oil prices above $100 a barrel in recent weeks, with local fuel prices expected to rise sharply in April. The Competition Commission spokesperson Siyabulela Makunga says there's a significant risk that some businesses may exploit the situation by raising fuel prices beyond what is justified.
This risk is prevalent for unregulated fuels such as diesel, retail prices, jet fuel, nitrogen-based fertilizers, plastic, fuel-intensive services such as air, land, and sea transport and logistics, and all other products and services that rely on these inputs, particularly food products and delivery services. And given the heightened risk of price gouging during this period of oil price volatility, the Commission calls on the public and businesses to report instances where they believe price gouging is occurring, so that the Commission can investigate such complaints.
All eyes remain on developments in the Middle East, with the hope of an end to the war soon. Katlego Logodi, SABC News in Johannesburg.
África. Conhece o Ntivani?
Claro que sou eu.
Ntivani é o amante da música de corpo e alma.
Eu amo música africana.
Ele aprecia todos os tipos de melodias e passa os seus dias a ouvir a Channel África.
Okay.
Adivinha só, a Channel África quer ajudar o Ntivani e os amantes da música em todo o lado a descobrir ainda mais música incrível. Por isso, a Channel África está a convocar artistas africanos a submeterem as suas músicas. Músicos, lembrem-se de nos dar todas as informações relevantes no music@channelafrica.co.za. As submissões são a vossa oportunidade de ser ouvidos, mas não garantem inclusão na lista. Todas as submissões serão cuidadosamente analisadas para verificar se cumprem os requisitos da nossa estação. Canal África, a perspectiva africana.
Africa is moving faster, smarter, further. The conversations are changing. The questions are deeper. The voices are stronger. So, we ask ourselves, what should Africa sound like now?
Not louder, sharper.
Not more noise, more meaning.
Something powerful is coming.
A new standard for the conversation. A new rhythm for the continent.
I love it. I love it for us. Oh my goodness. Please join us as we celebrate.
The African perspective is evolving. Catch it all next month, Monday to Friday, from before sunrise until long after sunset, only on Channel Africa. Get Channel Africa on DSTV Audio Bouquet. Channel 802.
Africa in Business on Channel Africa, the African Perspective. It's exactly 16:15 Central African Time. Now, the Automobile, or should I say the Automobile Association of South Africa, has warned it may take action against the government if upcoming fuel price hikes are driven more by taxes than global oil cost. Now, the warning comes as South Africa braces for a record increase in diesel and petrol prices, largely due to supply disruption linked to conflicts in the Middle East. Now, meanwhile, the South African National Taxi Association says it is considering fare increases amid operators' struggle to absorb rising fuel cost. For more on this, we're joined on the line by the CEO of the Automobile Association of South Africa, Bobby Ramagwede. Bobby, a very good afternoon to you, and thank you so much for making the time. Perhaps let me ask you, you have been quoted as saying that as an association, you were not expecting a dramatic increase in fuel prices, especially if South Africa's strategic oil reserves are available, and that's what the government told people. You know, in your view, what is pushing the government to impose such increase on the price of diesel and petrol?
Thank you for having me this afternoon to your listeners. So, only two possible scenarios could be playing here. If we do find ourselves with onerous increases on fuel prices, it's either indicative of opportunistic price increases by the state. Alternatively, it's an admission by the state that our strategic reserves are in fact depleted.
Indeed. And how much of the current fuel price is made up of taxes versus the actual cost of fuel, Bobby?
So if I'm to give you round figures, almost half of your fuel price is taxes.
All right, so half of it is taxes.
Correct.
Indeed. Now, what will be the real impact, Bobby, of these potential hikes on ordinary South Africans, and which sectors or households are most vulnerable to tax-driven increases?
So if you look at the reliance on fuel within the broader economy, the effect is far-reaching. So it's not just the cost of the commuter or those offering transport services, but you've got to understand that goods and services far and wide rely on petrol and diesel as an underlying cost. Think the distribution of food, the distribution of passengers, as far up as airfare as well. That on its own will introduce inflationary pressures that I don't think the government has fully appreciated the impact thereof. And we know how prices behave. If prices go up, they're very slow to come back down, if ever at all.
Yeah, and talking about the government, you have since issued a warning that you're prepared to take action. What immediate relief measures do you perhaps want the government to consider to ease pressure on motorists to avoid action from your organization?
So the government has always had at its disposal the ability to move taxes upwards and downwards. This isn't the first time that the government would be employing this lever. In fact, back in 2022, off the back of the conflict between Russia and the Ukraine, the state flexed taxes downwards. So similarly to that, our expectation is that the state will either make adjustments to the taxes, suspend the taxes temporarily, whichever measure they choose to use. The point is, give the consumer some relief, knowing that you have a vehicle or a lever that you can pull in order to institute that relief.
Yeah, and do you perhaps believe that South Africa's reserves are still available, and why are you convinced that there's still reserves that are available?
Well, in an interview a few weeks ago on a different radio station, I posed a question to the Department of Minerals and Energy, and they categorically stated on air that they bought the reserves back. Now, the question that really needs to be answered is, The reserves that were bought back in 2016, are they still present or were they bled off over time?
Did you get an answer?
Unfortunately not.
All right, then let's talk about the action that you are planning to embark on. Are you going to close all major routes?
No. So we don't plan on closing the routes. I think it should be stated and noted that we do not plan on doing anything unlawful. To the extent that we need to coordinate the efforts of various organizations and citizens of the country, we will mobilize in a peaceful, orderly, and legal fashion.
All right. So, but right now you do have signatures from your partners to say that if this happens, then you're taking the legal route.
Not necessarily signatures, but there are gentlemen agreements in place.
All right. Automobile Association of South Africa, Bobby Ramagwete. Thank you so very much for indeed making the time.
Thanks for your time.
All right. That conversation brings us to exactly 16:21 Central African time.
Let's just do it.
Your life just got easier. Get the Channel Africa app and take us wherever you go. Catch the latest news, enjoy your favorite shows, stream the music you love, and stay connected to the continent. All in one spot, right in your pocket. Simple, quick, and always with you. The Channel Africa app. Download it now on iOS and Android. Be inspired. Stay informed. Channel Africa, the beauty of life. Now available anytime, anywhere with our new app.
All right, let's look at this story now. Talks at the 14th World Trade Organization Ministerial Conference, MC14, ended in deadlock after Brazil blocked a United States-led bid to extend the moratorium on customs duties for electronic transmissions, delivering a fresh blow on the struggling trade body. WTHO Director General Ngozi Okonjo Iweala noted that the e-commerce moratorium had expired, allowing countries to impose duties on digital goods like downloads and streaming. However, the marathon discussions in Cameroon made headway in drafting a plan for broader WTO reforms, though final agreements remain pending. For more on this, we're now joined on the line by the CEO of XA Global Trade Advisors, Donald McKay. Donald, thank you so much for making the time and welcome to Channel Africa.
Good afternoon.
All right. What exactly was at stake at the proposed extension of the moratorium on e-commerce duties, and why is it so contentious?
So think of it this way. Everything you download off the internet, everything you might stream in the form of your Netflix, all of these are e-commerce transactions. And they have now the potential to be taxed. It doesn't mean they will be, but that's what the potential will be if this position stands.
Indeed. And how significant, in your view, is this deadlock for the future of global digital trade rules? And could the future to reach an agreement lead to countries introducing unilateral digital tariffs?
Yeah, I mean, that would be the effect of it. I think this is just a terrible idea. I say that, but South Africa, in fact, has been quite supportive of this view for a number of years now. So I think it's a terrible idea. I don't know how practically you are going to do this. How are they going to levy the tariff on Netflix, for example, or whatever else they might choose to tariff? So it's bewildering to me. I don't see what the upside is. Now, Brazil has said, well, we all need to collect more taxes, but very few developed countries in the world collect the bulk of their revenue at the border for good reason, because it's a terrible tax to impose. It's a counter-consumption tax, which is not typically what you want in a country. But be that as it may, the effect of this will be much the same as if you imported a bottle of wine or anything else, you will now be tariffed potentially on a imported electronic service.
Indeed, and many developing nations have mixed views on e-commerce duties. You just mentioned the issue around Brazil. If the moratorium collapses, who stands to gain or lose the most?
Well, of course, we don't know if it will collapse, and if it does, even if it does collapse, does that translate to countries imposing the duty? So the moratorium prevents you doing it, but when it falls away, it doesn't oblige you to impose a tariff, of course. I think the biggest loser would be the US, simply because the US is the world's biggest exporter of services. And so you could potentially, I guess, have a tariff on YouTube or Facebook or whatever else it might be. So I would think the US stands to be the biggest loser. But at the same time, I'm trying to see somebody deciding to do that, struggling to collect it, probably not collecting much, and also angering the US at the same time.
Indeed, but when you're looking at the trade body, World Trade Organization, they've been struggling for some time now, and I want to go to the MC14. Besides the e-commerce issues, were there any meaningful agreements reached, or was the meeting largely overshadowed by the divisions?
Yeah, so I'm not actually sure, to be honest, where all of this is going to land when everything's done and dusted. So we will have to see, and we'll need a little bit of time to go through everything. So at present, I'm afraid I can't answer that question.
Yeah. But in your view, McKay, to what extent are current geopolitical tensions, and protectionist trends undermining multilateral trade cooperation?
Oh, it's an enormous problem. So the US has led the charge of protectionism, but other countries have followed with great enthusiasm. South Africa, I might add, included. So we've moved into our most protectionist phase since democracy, in fact, and most other countries are following the same path. This is a road that ends with everyone being a little bit poorer, or a lot poorer if you're a small country. So I think this is a terrible direction, but the politicians love it in every country because it sounds good. The reality, I suspect, will be a material hit to economic growth, particularly in smaller, globally exposed economies.
Are we likely to see a shift away from WTO-led rulemaking towards regional or bilateral trade agreements?
Yeah, that would be incredibly disappointing. That, of course, is where President Trump wants the world to go, that we no longer have these big multilateral agreements. But I think that would just be a horrible, horrible outcome. What the WTO has done is it's created a very predictable trading environment for anyone in the world. And again, those benefits have massively accrued to smaller, poorer countries. So I think if we move to a point of bilaterals, your risk is always that you're in some form of gunboat diplomacy where the bigger country will always dominate and will be able to impose their will on you. And that is what the WTO largely sought to prevent.
Yeah, and it speaks about funding. I mean, if you look at South Africa's G20 presidency, was indeed talking about the rise of the global South, the issues around debt relief in the continent. But then the question is, are you perhaps you're indeed talking about the success stories of the WTO? Are they tangible? Would you say that these are you able to outline some of them that are indeed tangible?
Well, there's an incredible coincidence, I guess, if nothing else, that we see the world move into its most prosperous state, coinciding with the creation of the WTO. Now, there are other bodies around the world. The world sees far less conflict since World War II. That might be changing now. So certainly that wouldn't be the only factor. But for many countries, particularly poorer countries, which have seen significant economic growth, very close to 100% of those have grown because of better access into other markets. So, can we attribute all of that to the WTO? I mean, probably not. But I'd be very surprised if a material portion cannot be allocated to the WTO and the opening and predictable state of markets.
Yeah, indeed, I can tell you that it's going to be challenging if countries like America do not want to fund such processes, because it's all about the money to make sure that these organizations are thriving. Well, thank you so much for making the time. That was the XA Global Trade Advisors, the CEO there, Donald McKay. All right, the time is exactly 16:31 Central African Time. All right, we're going to go straight to Chandugo Ligege with the markets.
Business news on Channel Africa. The African perspective.
Thank you, Innocent, and a very good afternoon. $1 in Nigeria is 17 rand 10 in South Africa. Botswana 13 pula 65. Namibia 17 Namibian dollars 10. Zambia 18 kwacha 78. Kenya, the dollar is 129 shillings 09. Ethiopia 156 birr 26. Uganda 3,000 shilling 704. Tanzania 2,000 shilling 569. $1 in Nigeria is 1,382 naira. Egypt is 52 Egyptian pound 70. Tunisia 2 dinar 92. Algeria 132 dinar 17. Morocco, the dollar will cost you 90 rand 34. In Angola 912 kwanza. The Congolese franc is 2,275 to the US dollar. Commodities: gold is at $4,549, platinum at $1,901 per ounce. The price of Brent crude oil at $114.83 a barrel. That is all from me. For any business stories you'd like to share with us, please send us an email to newsroom@channelafrica.co.za, or you can call us on +27 11 714 4459. For Channel Africa Business, I am Chandugo Ligege.
Business news on Channel Africa. The African perspective.
All right, thank you, Chandu. Let's now go straight to Sports Desk with Musibudi Makura. Good afternoon, Musibudi.
Sports on Channel Africa. The African perspective.
Thank you so much, Innocent. A very good afternoon from the Sports Desk. Well, the Confederation of African Football, President Patrice Motsepe has confirmed the appointment of Samson Adamu as the acting Secretary General of the organization, replacing Vernon Mosengo Omba, who stepped down in his position yesterday. Adamu's appointment is said to have been proposed and ratified by the CAF Executive Committee following their meeting at the Giza Palace Hotel in Cairo, Egypt yesterday. He becomes the first Nigerian to serve decades, or rather in 7 decades, should I say, to occupy this position, and has been serving as the CAF Director of Competitions before. Motsepe says that in Adamu, they have an experienced administrator who knows African football very well.
Samson is fully bilingual because it's important for me and CAF that the General Secretary, particularly when you've got a president whose French or Portuguese is almost non-existent, that you've got a Secretary General. Samson loves African football. I've told Samson whether he likes it or not, I'm going to put pressure on him also to apply for the position to be permanent. I did promise him I'll give him a little bit more money because it's he says, President, I've got lots of expenses. And of course, we want to employ some of the smartest and the brightest.
Namosenga Omba's departure didn't come as a surprise, as in the past few months there had been a lot of reports about him having passed the retirement age at CAF, but Motsepe also revealed that the now Swiss Congolese national will be channeling his energy towards reviving the Democratic Republic of Congo footballing structures, fueling his speculation that he will soon take over the FACAFOOT presidency.
And on behalf of the people of the Democratic Republic of Congo, have asked him to come and assist and come and help with football development within the Democratic Republic of Congo. And he says, listen, I'm very strong, but I feel like I want to make a contribution to the development of football in a country that has been so, it's my country, I grew up there, that has been so helpful.
On to cricket news now. A consortium of investors, including US asset management giant Blackstone, on Tuesday announced, and that was last week by the way, the takeover of the Royal Challengers Bengaluru, one of the founding members of the Indian Premier League, for nearly $1.8 billion. The announcement comes just days before the start of the T20 lucrative league. The franchise, which won the IPL for the first time just last year, was sold by United Spirits Limited, the Indian unit of British alcoholic beverage giant Diageo, for $166.6 billion US. And in a statement, the acquiring consortium said it was proud to become custodians of RCB. The group includes Bold Ventures, run by leading sports investor David Blitzer, Indian media conglomerate The Times of India Group, along with Blackstone, and the Indian corporate giant Aditya Birla Group. On to some football news now. Igor Tudor has left his role as Tottenham Hotspur's head coach after 7 matches in charge. Spurs made a surprise decision to turn to Tudor just 44 days ago after dismissing Thomas Frank. The Croatian had never managed in the Premier League, but had experience of sparking an upturn in form after mid-season arrivals at other clubs, and yet lost his first 4 matches at the helm of the North London club. Tudor's exit leaves Spurs without a head coach heading into the final 7 games of the season, as they now sit just 1 place and 1 point above the relegation zone. The North London club will now look for a 3rd managerial appointment of the season, as they now aim to avoid relegation to the 2nd tier for the very first time since 1977. And finally, Seattle could regain an NBA team after the league's Board of Governors voted to explore adding 2 expansion franchises, with Las Vegas also under consideration. The Supersonics completed from 1967 until 2008 before relocating to Oklahoma City. As the Thunder, if approved, the expansion would then increase the NBA to 32 teams. Las Vegas, which has never hosted an NBA side, already boasts the Golden Knights in the NHL, as well as the Raiders in the NFL, with the MLB's Athletics set now to move there in 2028. Seattle, meanwhile, remains a major sports hub, with the Seahawks, the Mariners, as well as the Kraken as some of the teams representing Seattle in respective sporting codes. It is 16:38 p.m. Central African Time. It concludes your sports news this afternoon. For any sports stories you'd like to share with us, remember to send us an email to newsroom@channelafrica.co.za. Alternatively, call us on +27 11714 4459. For Channel Africa Sport, I am Musibudi Makura.
Sports on Channel Africa. The African Perspective.
Very big thank you to the sports desk. The time is exactly 16:39 Central African Time. This is Africa in Business on Channel Africa. Let's look at the story now. Malawi is facing rising economic losses from climate change, currently costing the country around 1.7% of its GDP each year. Experts warn that losses could reach between 3 and 9% by 2030 and up to 16% by 2050 if trends continues. These figures were highlighted at the 5th African Regional Conference on Loss and Damage in Lilongwe, which concluded on recently. The summit brought together policymakers, researchers and climate specialists to discuss the impact on growth, infrastructure and public finance. Channel Africa's George Mango reports from Blantyre.
At the conference, discussions highlighted that Cyclone Freddy alone affected over 2 million Malawians in 2023, underscoring the economy's vulnerability. Experts and policymakers noted Malawi's substantial losses to climate change, now impacting infrastructure and communities. Beyond domestic pressures, focus has shifted to the global financing gap. Pan-African Climate Justice Alliance Head of Programs and Research, Charles Mwangi, said funding for the Loss and Damage Fund remains critical low at less than $1 billion years after its launch, mirroring local shortfalls.
Our governments are being forced to spend a lot of money trying to salvage the situation. But again, this is the 5th time we are meeting here. We came here in 2022 for the first conference, and that time we were pushing for establishment of loss and damage facility. And that has been established. But again, the challenge we have is that establishment is one thing, but capitalization of the fund is another thing. So we don't have enough of resources put in that kitty. It is actually less than $1 billion that has been committed into that kitty. Yet the needs are immense. And we are saying, let nobody tell us there's no money in the world. A lot is already being spent in Ukraine. A lot is already being spent, or should I say wasted, in Iran and the war in Iran. Yet people are not getting to see the urgency of dealing with climate change. Well, we can actually negotiate with each other as countries that are actually fighting, but we cannot negotiate with nature. So when the wrath of nature comes, it will first of all hit Africa like it is hitting us, but indeed it's going to catch up with everybody.
Malawi's Minister of Natural Resources, Patricia Whiskes, who opened the summit, described climate impacts as a daily reality rather than future risks, citing repeated cyclones that destroyed infrastructure, displaced households and disrupted livelihoods. She noted the financing model is skewed with 88% of climate funding from donors via short-term project-based aid that favors relief over resilience.
As Africa, we must have one negotiating voice to say we are not on the forefront. We have the burden of having to deal with issues of climate change, yet these issues of greenhouse emissions are not propelled by Africans. So what we must do as Africa is that we need to unite and speak with one voice.
That report was from our reporter, George Mango, reporting from he was talking on the 5th African Regional Conference on Loss and Damage in Lilongwe. All right, let's look at the story now. The South African Medical Research Council, in partnership with the Presidency's Presidential Youth Employment Intervention, hosted the Outcome Finance Alliance Summit to explore strategies for making pay for success financing infrastructure and instruments cost-effective and scalable. Now, the summit also aimed to support development agencies and governments in advancing the UN Sustainable Development Goals. The South African Medical Research Council leveraged the event to identify pathways for expanding public-private partnerships that can accelerate the impact and institutionalization of outcomes-based financing in addressing high HIV rates and broader pressures on South Africa's health system. For more on this, we are now joined on the line by Professor Farid Abdullah, the Director at the Office of AIDS and TB Research at the South African Medical Research Council. Professor Abdullah, thank you so much for making the time. Perhaps let me begin by asking you, how does hosting the Global Outcomes Finance Alliance Summit align with South Africa's broader health financing and innovation strategies?
Good afternoon, Innocent, and thank you for having me. Outcomes-based financing is a relatively new instrument that helps countries to optimize the use of their resources. As you know, we've had declines in donor funding, and that means we have to use our resources more effectively. One way of doing that is to pay for outcomes rather than inputs. That just optimizes the value for money that we get from money we spend on health and development generally. This conference brought together people who are implementing these instruments in 28 different countries, and our aim was to learn from them and to test the projects that we have in this country against an international standard.
Yeah, Professor Abdullah, may you kindly please explain how outcomes-based financing works and how it's important for improving healthcare, particularly in South Africa?
So I'll use a very specific example of a project we have implemented at the Medical Research Council. In this project, we wanted to provide HIV services for young women and services to prevent unplanned pregnancies and provide early antenatal care. But instead of going to the government or to a donor to provide this service, we went to the investment market. So we make an appeal to the investment market, bring an investor on board. They put up the working capital for this project, and as it starts to achieve outcomes, government then buys those outcomes. That has two effects. One, government only pays for successful outcomes. If the outcomes are under reach, if they're not reached, if there's underperformance, the investor carries that risk and loses money. But as you know, if someone is losing money because you're not performing well, then that improves performance. So everybody kind of wins in the end, theoretically.
Yeah, and Prof, which areas of the health sector, in your view, and in the country could most benefit from innovative financing models discussed at the summit?
Well, I think that probably the first sector which should get more interested in this is the not-for-profit sector, the NGO sector. At the moment, the NGO sector, is basically looking for grants from donors or from government, whereas they could go to government or to donors and say, look, we have a better offering. We will raise the capital for this. And if we achieve outcomes, then you as government can pay for that. So the NGO sector is definitely a sector which should become interested. The other sector is government, because NGOs or proof of concept projects like we have at the Medical Research Council can only be limited in size. But if you want to scale this up, then government departments really need to take this up and do things at scale, perhaps to select underperforming projects and programs, to address projects which fall between multiple departments. You create this instrument to do this. And the third group are investors with looking for a social impact. And there are investors out there these days who are not only interested in the financial returns, but they want to make a difference. They want to show social impact. So they would be prepared to take a lower return on their investment if they can get a social impact. And those are the people who I think are starting to coalesce around these instruments.
Yeah, and Prof, there's always this, it's often said that collaboration is key, and which brings me to my second question. What role do you see private sector and impact investors playing in really advancing health outcomes in the country?
Well, I think that they need to, come to the party to provide capital, risk capital, which means that they must be prepared to take on the risk of failure and underachievement, and they must be prepared to do it at scale, because at the moment, government takes all the risk of failure. They pay for programs in countries like South Africa where often you don't get value for money from a government program because the implementation is not effective, execution is poor. And the private sector needs to take on some of that risk of failure. But, what happens in these instruments is that the private sector, to mitigate its financial risk, will get more involved in these projects, provide expertise, know-how, management capabilities, and that's what we need to do. I think the private sector is ready to make these investments, but we also need to be able to distinguish between those who are truly interested in social impact and those who are only interested in the bottom line.
Yeah, you are saying private sector is ready to fund, but what are some of those obstacles that are preventing private sector? Is it policies? What is it, Prof?
So one of the barriers is that the rule book has not been written for these transactions. In the case of the Medical Research Council, we use public sector money, so we needed Treasury approval for this. And it took a long time to figure out what approvals were required because there is no regulation, there's no Treasury regulation. So that's the first thing. The rule book needs to be written at the MRC. We're co-funding an operational handbook which will help to guide people who want to do these transactions. The second is to ensure that the money will be there when it's time to pay, otherwise known as a guarantee, so that if the private sector invests money and the projects work, they know they will get their return, they will get their money back, their capital back,
right?
But also a reasonable return on investment.
Indeed.
So the ecosystem needs to be built up properly, and I'm happy to say that in our case, working with the presidency and the treasury, we are committed to building up this ecosystem so we can have more of these transactions in the local context. But also in Africa, countries in Africa are also interested. We had 7 countries, African countries, at this meeting last week, and there's a lot of interest to do business differently.
Right. That was Professor Farid Abdullah, the director at the Office of AIDS and TB Research at the South African Medical Research Council. All right. That conversation brings us to exactly 16:52 Central African Time, and is the time where I welcome Joël with Vue d'Afrique. Ça va?
Oui, ça va. Bonjour Innocent, merci. Bonjour à tous les... Ça va?
Ça va bien.
Très bien. Bonjour à tous les auditeurs de Channel Africa. Alors sur Vue d'Afrique tout à l'heure, il sera question notamment de la Centrafrique. Faustin Archange Touadéra, réélu en décembre 2025 avec 77,90%, a été investi ce lundi à Bangui lors d'une cérémonie. Nous en parlerons et nous parlerons aussi du soutien officiel, je veux dire, de la candidature de Macky Sall qui est maintenue. Macky Sall maintient sa candidature au poste de secrétaire général des Nations Unies. Mais nous nous rendrons aussi au Gabon. Nous parlerons du nouveau code de la nationalité qui suscite la controverse après sa promulgation. C'est sur Vue d'Afrique tout à l'heure. Merci de rester connecté. Merci Innocent.
All right, have a productive show, colleague. All right, she's up next. It's exactly 16:53 Central African Time. You're listening to Africa in Business on Channel Africa.
Be inspired. Stay informed. Channel Africa, the beauty of life. Now available anytime, anywhere with our new app.
Right, in today's market feature, we look at the factors that contributed to the South African Reserve Bank holding the interest rates, and we also look at what to expect from the quarterly employment statistics. A senior economist at FNB, Koketso Mano, joins us on the line. Koketso, a very good afternoon to you. Let me perhaps begin by asking you, what's your reaction to the Reserve Bank holding rates? And would you say it's a good call considering the ongoing war in the Middle East?
Going into that meeting, so coming into 2026, right, we would have thought that the landscape is finally better. We're probably going to have better operating conditions this year. And so this March cut was part of that good news story where we were anticipating that the Reserve Bank definitely had space to cut interest rate based on our inflation outlook, as well as how inflation expectations were shifting closer to that 3% target that they would like us all to have in mind. But since the war broke out, it was certainly becoming clear that elevated oil prices, the impact that would have on fuel inflation, and the likelihood that would be spread across different goods and services in the economy, just given the input that is fuel in many of these services, we decided that the cut was probably not going to come, and it makes sense that the Reserve Bank decided to stay in this wait and see approach, just given that it's so uncertain how long this war will last. The exact impact on infrastructure and logistics is still being understood, so it does make sense that the Reserve Bank would be prudent and remain on put until they see exactly how this war unfolds.
And could we see rates being cut anytime soon?
We would have hoped, but there are two things, that will determine whether the Reserve Bank will cut interest rates later or not. The first being, if this shock, that is the oil price, is transitory, it's temporary. It only lifts inflation in a very concentrated manner, right? Either through fuel inflation or transport inflation, but does not really spread to other costs in the economy. Then the Reserve Bank could look through this noise, as they said that they are doing by, keeping interest rates unchanged. So they'd probably keep interest rates unchanged until later in the year, where they're able to decipher exactly, the pass-through of this shock. But should the pass-through be material, shifting a lot of prices in the economy, even lifting inflation expectations further away from where the Reserve Bank would like them to be, which is at 3%, then certainly we would see the Reserve Bank wanting to either make sure that inflation expectations do not move significantly, or reduce the extent of second round effects in the economy. And then in that case, we could actually see interest rates being hiked, never mind a cut.
Yeah, and Koketso, looking at the week ahead, the quarterly employment statistics will be released by Stats SA. What trends are we likely to see?
We're not likely to see very significant changes when you look at the long-term trend, right? So in the near term, yes, there is that volatility, especially in the fourth quarter, where you would see seasonal demand picking up in terms of employment, and that could drive the number higher from a trade perspective, especially if you look at trade and services and the likes. However, when you look at the long-term trend, you will generally see a very gradual improvement in employment outcomes in this economy. We're still seeing very pedestrian growth, so you don't see very strong employment creation as a result of that. So you're probably going to see that coming through in the numbers. What should at least give us deal with the who's employed versus, pardon me, then you deal with the who's employed versus who's not employed in this economy, and those are issues that we continue to grapple with.
Yeah, Koketso, manufacturing PMI for March will also be released. Are we going to see a positive print this time around?
All right, I couldn't hear your question anymore, but I do understand that you wanted to also speak about what we expect in terms of manufacturing PMI.
Yes.
And when you look at the manufacturing PMI numbers, especially when you track the numbers on a month-on-month basis, you will see quite a lot of volatility coming through there, right? But it generally speaks to a manufacturing sector that is grappling with all of these global headwinds. Just when you think that export numbers may pick up, then you have this shock at the global level that will probably weigh on demand and weigh on supply if disruption.
Koketso, are you still with us? All right, it looks like we might have lost Koketso. Right, that was a senior economist at FNB, Koketso Mano, joining us there, talking to us about the markets and the trends to expect later this week. And of course, we are looking ahead of the quarterly employment statistics that will be released by Stats SA. Well, that's my lot on this episode of Africa in Business. My name is Innocent Semosa, and of course, I was in for Tami Ngobeni. Let's continue to build a better Africa. Bye-bye.
For 60 years, Channel Africa has